Hey everyone, so welcome back to my channel. Right, first of all, I just want to say a huge thank you to all of you who have been sending me a lot of love, who has been commenting, who has been sharing my videos to your friends, to your family, right, talking to me about investments, all right, and of course, getting to know more, okay, and wanting to know more because this is a learning channel, all right. This is not a channel where I tell you what to buy, all right, but I will educate you and give you a little bit more, a better perspective of what investing is about. Okay, so before I start, all right, I know that many of you do not know me yet. All right, my name is Gabriel. I am a nurse in the day, and well, basically, my love for investing came about a couple of years ago. When I met a friend and he introduced me to the world of investing. All right. Uh, let's be clear about certain things. I'm not here, all right, to tell you what to buy. All right. I'm not being sponsored by anyone. Okay. And my main motto, all right, or my main principle over here, all right, is to just let you guys understand and give you a better perspective of investments. Okay, this is not my full-time job, like I say. Okay, this is just something fun to do. All right, but if my channel actually helps you a lot with what you want to do right now or probably in the future, or even helping you in any ways right now, all right, please do like, share, and subscribe, all right, to my channel. And I hope to give you all more content uh, with what I do. All right. First things first. All right. This channel I do not edit. All right. I do not edit at all. So it's basically straight up my thoughts just coming just like that. All right. Everything is just right in my head. So yeah, just more. I think this is more fun. All right. Rather than edit. I mean, edit is good. All right. But I prefer to interact with you all this way and to make things more informal to all of you. Okay, you can see, I'm. It's pretty late at night, but who cares? All right, I speak what I want to speak. All right, I just want you all to understand in a more candid way, lah. All right, in terms of investing. So please do share with your friends if it helps you a lot, and hopefully my channel will grow. All right, into something that I can help anyone one way or the other. Okay. Yeah, do drop me a DM in my Instagram or do drop me a DM on my Facebook page. All right. And I'm more than happy to discuss with you and more happy to talk to you about investing. Okay. So today, what we're going to do is I'm going to talk to you about valuation. All right. My previous video or my previous two videos, all right, two videos before, we talk about fundamentals. All right. Once you get the fundamentals, we need to know about valuation. Why? Because I do not want you all to buy an expensive, buy a stock where it's expensive, right? I want to get it at a value, all right, at a price where it's reasonable, all right, at a price where you're happy, all right, and a price that you don't lose out in the future, all right, long term wise lah, okay, you don't lose out lah, all right. So um, why is it important, all right, to look at the valuation of a stock, all right? Basically, all right, the cheaper you get, the more money you earn. All right, it's just basically this potato chip here. Okay, if I were to buy this potato chip at 50 cents and I can sell it $1, right? Or should I buy this potato chip at 80 cents and sell it $1? All right. So I would rather buy, right? The first one would be better, right? To buy at 50 cents and sell at $1. So it's the same concept, same logic. All right. So what we're going to do is number one, I'm going to show you, all right, how to calculate valuation. Right, there are many ways to calculate. Okay, to be honest with you, um, there's just so much, methods. But I'm going to show you the basic method of calculating valuation. All right, so basically, okay, we need to find out, okay, the PE ratio. Right, how to find out the PE ratio, the stock price, Okay, divide by the earnings per share. Okay, I'm going to link everything below, so not to worry. Okay, so what is a good P/E ratio? All right, good question again. All right, so down here it says a good P/E ratio is about 20 to 25. Okay, higher if let's say you consider, you consider over here, okay, that you're paying more, okay, in the future lah. Okay, so a high P/E ratio, whether compared to the industry average or its historical average, means you're paying more for each dollar of earnings. But it also implies that investors are expecting the company to grow earnings faster in the future, which means to say, all right, even if it's above 25, you have to understand why you're paying above 25. All right, maybe it's a hyper growth stock. Maybe you see a potential in hyper growth. Maybe you see potential in a lot of growth in this company. That's why the P/E ratio is high. That's why investors are buying more. Okay, so now you don't have to go and do calculation. Okay, very easy. What we're gonna do is I'm going to go into, okay, Yahoo Finance. Okay, and then I'm going to look at the PE ratio. Everything is there. All right, the EPS, all right, the stock, okay, everything is there. Main thing you need to do is you look at the, all right, PE ratio. So I'm looking at Google right now, all right, and it looks like a very good value, right? Slightly undervalued, all right, but it's a growth stock. A slightly, it's a growth stock and it's slightly undervalued lah. Okay, and then we look at Meta, right? Is it growing? Well, hard to say. Do not know. Not so sure. Okay. Why is that good value? All right. Fundamentals are right. If you think that fundamentals are right, if you have done your search, your research and everything, and fundamentals are right, the PE ratio is right, probably you want to consider. Okay. Now, we look at something like Tesla. All right. Why is people still buying Tesla? 53, 52, 53. Why people are still buying? Of course, they expect in the future, all right, that there is a lot of growth. Of course, you talk about Elon Musk with Twitter and coming out with the semi, or rather the semi. You talk about the Cybertruck. You talk about probably even the potential of having a Tesla phone, right? So a lot of potential. All right. So certain investors do not mind paying at a premium. All right. So basically, you're paying at a premium. All right, for a future growth. Okay. Now let's look at Active Vision. Okay, Blizzard, which is this is a company where you have your games lah. Basically, I think it's called Call of Duty. Okay, so what is the okay? So basically, you just have to go to the income statement. Sorry, you look at the financial. Sorry, you look at summary lah. Okay, for more fundamentals check, you look at financials. So hi, why? Okay, the question is why? This one the company like normal leh. But how come so high? That's where you have to do the fundamentals. I'm not going to tell you why. If you want, go and Google, okay, Activision, and you'll understand why, okay, some people do not mind paying for this price, okay. So basically, it's that simple, okay. Now, you ask me, like that, how, if let's say I want to, let's say I want, okay, I see Tesla still very expensive, okay, what can I do like that? I want to pay at maybe a 25 PE ratio, very simple. Okay, let's go to the calculator. Okay, and then let's go back, all right, to the chart. Okay, so stock price divided by earning price, P ratio, right? So now, so P ratio, if you want P ratio to be at 20, so it's 20. Okay, 20. What's the EPS? What's the, sorry, earnings per share now? Yeah, EPS, 3.48. Okay, times 3.48 times 3.48. Okay, $69, $70 lah. Okay, so you can buy at about 69, 70 if you want to. If you want to wait, you can wait. Okay, so it really depends on how you want to calculate and what kind of EPS you want. All right, so if let's say now you want, say, actually, there's still potential lah, but I don't think I want to pay at this price. So simple lah. So let's say I want to go at 33.48, right? If I'm not wrong, 3.48, yes. Okay. So I don't mind paying at 104 or 105. So that's how you actually gauge, all right, the P ratio and how you evaluate things. Very simple. Okay. So this is what I want to do today. Okay. It's very, very short video. All right. And I hope you guys do enjoy the video. Okay. Once again, guys, do stay safe. All right. And if they're safe, I gotta go and I'll catch you soon again. Take care. Bye bye.